value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from TheTechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
About a week and a half ago, a scary time on the equity markets when the board was just red right across with big negative numbers. Has it come back?
Yeah, it's trying to come back. The market's had a really nice waterfall correction there. Everything fell on the NASDAQ, the SP 500, to hit the 50-day moving average, which is a pretty critical support level. We've seen the indexes like the SP 500 hit this 50-day moving average twice since the March lows. Each time it acted as a critical support level, and we saw big rallies follow after that. So we are at that level now. The market's had a 2-day bounce off it. Hopefully we can see some more upside momentum here and see stocks continue to go back up and potentially test the new highs.
What areas are showing the most promise?
Yeah, there's a few sectors that are really starting to come back to life. Technology has definitely had a nice bounce. It's performing very well, but there's a couple others, which is this week we saw biotech really have a big bounce. The whole sector jumped about 6% on Monday and back up another 1.5% again on Tuesday. Overall, we're starting to see headline news of vaccines coming together, potentially more good news on vaccine progress in October. So there's lots of good talks on that front. And you look at the biotech sector, it's had a beautiful run, and it's been out of favor for 2.5 months. And so now it's starting to turn up. Today it actually is making a higher high, a higher previous high on the chart, indicating it's in an uptrend. It's not about to make new highs yet, but it looks like it's on the verge of taking the lead. And COVID, the vaccine, could actually start to spur that sector on. Another sector that's kind of coming to life as a very bullish pattern is the real estate market. If you look at the IYR, which is a real estate ETF, it's got a beautiful bull flag formation. It's formed a large basing launch pad, more or less, is what it is. And it's starting to break to new multi-month highs today. And it's got lots of potential to run up. So I think we're seeing investors and traders get a little bit bored in stocks. They've been trading lower for the last 2 weeks, and they're looking for alternate asset classes, and real estate is one of those. And then the other one is precious metals. We've seen gold, silver, and miners form a really nice bull flag formation, and more or less they're pointing to much higher prices as well.
How's the U.S. dollar doing?
The U.S. dollar has been trying to put in a bottom. It feels like since we've been waiting for this stimulus plan, the markets have really kind of just gone dormant. The dollar's, it looks like it's putting in a bottom. It looks ready to rally, but depending on the stimulus plan, it could end up going to new multi-month lows. The bigger the plan, I think the lower the dollar could potentially drop here, which would be a good sign for precious metals. So at this point, the dollar is kind of in neutral territory. It's trying to break to the upside. We do need to see it move above the 50-day moving average, which is a couple percent away. But overall, the dollar is holding on, and it looks like it has a bottoming formation. But this whole market, even miners and the stock market, is really taking a breather because we don't have any big news, it feels, in the headlines. I think a lot of people, stimulus, elections, there's a lot of things kind of stacking up that are kind of getting kicked down the road, and investors are waiting to probably have more direction there before they dump more money into the markets.
Do you see ultra low interest rates remaining for a long period of time?
I think we are going to see low interest rates for a long time, and Yeah, I don't really see them having a huge move to the upside by any means. I think they're going to be very cap limited. And, I mean, that is a good thing for the real estate market, although, low interest rates, very tough on the banking industry, the financial sector. There's so many mixed signals in this market with, some things that are good, some things that are bad. It's a real mixed bag. And that's why the market is so unstable. And we have been seeing, record highs on the stock market, but it's been doing so in a very strange way where, select sectors are really doing all the heavy lifting. There's very little liquidity, so when selling starts to hit the market, there's no one there to buy it, and we see price collapse very quickly. And we saw this in the NASDAQ a couple of weeks ago. I was telling subscribers, be aware this market is on the verge of a 5 to 10% correction in a 2 or 3 day window. It's just going to collapse and catch a lot of people off guard. And the NASDAQ fell 11.5% in, I think it was 4 trading sessions, and right down to the 50-day moving average. And people seem to be shocked by that, but the charts and the internals of how weak this market is, it's very brittle. When it starts to fall, it just collapses, and that's the risk that people don't really see, but it's underlying in this stock market.
We'll have more with Chris Vermeulen right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, is there much action on the crude market?
Yeah, crude oil's had a beautiful run since the March lows, but it ended that run about a week and a half ago as it broke down below a June low. It also closed below that critical 50-day moving average, so it is making lower lows. Closing below the 50-day is a short-term bearish sign, meaning we're expecting lower prices. Right now, the last 5 sessions, crude is traded sideways. It's kind of consolidating. It's taking a breather from that 15% drop. But overall, this pattern is still very bearish. And it is actually still pointing to $31 or $32 per barrel to the downside. Current price is $38.25. So there's quite a bit of downside potential on crude based on this chart. And if you look at the energy sector stocks, they've actually been underperforming, making multi-month lows month after month, and they typically lead crude oil. So there's definitely not a lot of commitment in the energy sector, and usually you see the stocks move first, and then you see the underlying commodity. That's what we've seen here, and crude looks like it's going to be heading lower over the next couple of weeks.
How's natural gas doing?
Well, natural gas has had an amazing run. It's the last couple of weeks, 3 weeks here, it's been pulling back. But overall, it's put in a multi-year cycle low. Pretty much every about 4 years or so, we see a major standout low on the chart of natural gas. I feel as though it's just completed that. It is now in rally mode. But the problem is it's very tough to trade natural gas. I think we're going to see natural gas trade in a very big range between more or less 275 all the way down to around this 220 or 215 mark. It's a big range, but it's going to, I think, trade in there for several months. But when it breaks to new highs from that pattern, above that 275, I think it's going to have a very big rally into the mid and the upper $3 range. So there's a lot of potential for natural gas. It's just hard to play it because there isn't a good investment or trading vehicle for it. You need natural gas to move right away, or the ETFs lose value just by holding them over time. So it's a real tough one to trade, but If you're a futures trader and you've got other ways to trade it or good ways to trade it, longer term, this looks like a very good play to the upside.
We'll have more with Chris Vermeulen right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, are people paying more attention to the gold miners no matter what's happening with the stocks day to day?
I think they are. I think gold miners are starting to become a favored asset class. They're still not highly popular, which is pretty normal. Gold miners really just broke into a bull market a few months ago. And so it's in its infant stage. It's just getting started. Typically, the masses will get involved when it's about to top out. And I think we're a long ways away from that, many months away from that. But it seems to be when there's not a whole lot going on in the stock market or there's a little bit of fear, we see the gold miners come back to life. And whenever we see selling in the stock market, they do get hit, but they always recover. They seem to recover by the end of the day, more so than the stock market. So they are affected by selling in the market, but they're definitely rebounding. They're showing signs that they are kind of the next, I think, asset that could actually have some of the most upside potential. When you look at the charts, gold miners and actually real estate, both of those charts look really good for a significant move to the upside. And gold miners actually broke to a new uptrend as of yesterday. So they're the first to lead. And as I mentioned with energy, you see the stocks move first, so gold miners, and then you typically see gold, the commodity behind it, later. So I think we're just starting some really exciting price action in the precious metal sector.
Why do you think real estate's going to be hot?
Looking at the chart is my main reason. The chart is very bullish. It's been holding up. It has the same pattern that the transportation sector had a couple months ago before it broke out. The industrial sector, same pattern again, and it broke to the upside. And real estate, we've got low interest rates. It's kind of a bit of a different asset class that when people kind of get bored or they think stocks are going to move back, people naturally fall back to what they're comfortable with, which is real estate, REITs. Just take your dividends, your rental income, and hold on to a physical asset. So that's why I like real estate, mainly because of the chart, but it is going to be a kind of a bit of a fresh play when it starts to take off. I think we're going to see headline news for real estate over the next few weeks as it starts to outperform the rest of the market.
How are utilities doing?
Utilities are a little bit of a fear move. They've been doing a similar pattern to real estate where they've been dormant for quite a while. They're definitely underperforming the stock market over the last several months, but they're holding up very well compared to the stock market right now, and they're building a very similar pattern that points to much higher prices on the chart. And I think there's a upside potential for maybe a 10 or 12% upside move in the XLU, which is the utility sector ETF, from where it is. So I think as things drag out and become more uncertain because there's no news on stimulus and election, all this worry, I think we're going to see this fearful money kind of go defensive, which means they're going to go to utilities where they need electricity, they need running water, they need all those things no matter what happens, and those companies pay dividends. So I think as things go uncertain and we work towards this election, utilities are going to favor that fearful money, just saying, hey, put me in, the kind of safer, the more boring kind of dividend-paying sector, which is utilities.
Any action with the cryptos?
Well, Bitcoin, it's had a pretty big correction. It was forming a nice bullish formation a few weeks ago, and it ended up breaking to the downside. And so it had a big drop all the way down below 10,000, and now it's bounced to 10,700, which it's forming a bear flag, actually, very similar to crude oil, meaning it's pointing right now to lower prices. It has a bear flag. It's under the 50-day moving average, and this chart pattern is showing that we could see Bitcoin go back down to around 9,000, 9,200. So there's quite a bit, $1,500 downside per Bitcoin from where it is right here.
Chris, how would you sum up what's happening in the markets right now?
Well, to sum it up, I think investors putting new money to work are definitely paying a premium for stocks. We're at that 1999, 2000 kind of PE ratio bubble price. Everything is being sold at a premium. So there's a lot of risk holding stocks long term here. I think you could buy them at a discount later. The thing is you can't fight the Fed. You can't fight the trend. So if you are putting new money to work, I wouldn't go dumping all your money into the stock market. I'd be easing into it, small positions, and have a game plan that if the market drops, say 15 or 20% from where we are here, you may want to be trimming back positions because who knows how far the next drop may be, and you really need to preserve your capital because this is a very unstable market and a lot of price action can happen in a very short period of time. It's better to miss gains than it is to give back, 20 or 30 or 40% of your retirement account. So that's what I always kind of focus on is preserve capital versus trying to maximize it with long-term investment capital.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.